stake in Opal, GAIL has 49.2%, Gujarat State Petrochemical Corp has the remaining 1.43%. But this restructuring will mean that GAIL will go out and ONGC will have to infuse 15,000 crore rupees of fresh funding into Opal, and hence markets appreciating the move. GAIL stock too up as a result of that piece of news. That's why you're seeing both ONGC and GAIL up nearly 1%. As far as Reliance and TV18 is concerned, Viacom 18, a subsidiary fully owned by Reliance, has picked up rights for the next 2 seasons of ISL, India Super League, the football, tournament, and because of that, you're seeing movement in both the Network 18 stock, the TV 18 stock, as well as Reliance stock. Bear in mind, these rights were with Disney Hotstar for the last 9 seasons, so it's a big decision. It's moving away. ISL moving out from Disney Star to Viacom 18, both digital rights and broadcast rights. Clearly auguring well as far as the stock is concerned. That's why you're seeing Reliance and TV18 up. Nazara Tech, bear in mind, has raised 500 crore rupees in the last 4 days. 100 crore rupees from Zerodha for a 3.5% stake, and more than 400 crore rupees from SBI Mutual Fund, which has picked up a 10% stake. So 500 crore rupees plus worth of funding in 4 days as far as Nazara is concerned. So clearly investors cheering that move, stock up nearly 1.5%. And funnily enough, a related other gaming stock, you have Zenza Tech, which is another related gaming stock that we're talking about, also up nearly 3.5%. So gaming space, after all that bad news on online gaming and GST on online gaming, fresh investor interest moving the gaming stocks over there. Also, apart from all of this, the first stock in action, Shweta, was LIC. SEBI disposing of adjudication proceedings against LIC. That piece of news bringing relief to LIC investors, and that is moving the LIC stock up in trade this morning, Shweta. There are tons more, but these are the first stocks that I can come at the top of my mind as far as the big stocks in action are concerned. Bear in mind, look at these stocks, and I would love to get Amit's view on them, Shweta. Mazgaon Dock stock up nearly 10%. Cochin Shipyard stock up over 8.5%. Havells India up 3.5%. Some of these stocks are moving, especially Mazgaon Dock and Cochin Shipyard. Amit, we have if we have Amit online, then we can talk to him and ask him. Of course, Shweta will ask him. But I'd be curious to know how come some of these stocks are hitting their 52-week highs, and they are at near 10% and 9% up. Amit, Mazgaon Dock, Cochin Shipyard, 2 stocks I wanted to quickly check with you about. Mazgaon Dock up nearly 9.8%, nearly 10%. Cochin Shipyard up nearly 9%. What's moving these stocks?
So basically they are, sort of, I would say, overextending themselves at this point of time. They are quite disassociated with the fundamentals. But what is happening is they are getting very good orders from the government. And there is an anticipation that even in the G20 meeting, there could be some memorandum of understanding signed in the shipping industries with certain countries. So I think that's moving the stocks. Obviously, these stocks were sort of untouchables 12 to 18 months ago. So quite under-owned, stocks, despite very available, very cheap, and even around the book value. So now we have seen a rush into these stocks, whether it's Mazgaon Dock or Cochin Shipyard. Both have seen a very strong rallies, but I think now they've reached a kind of a valuation which cannot be justified with the current order book, at least for the next 2 to 3 years. I mean, we are now extending from like FY26 earnings to even further 27 and 28 earnings. And my experience is when these kind of stocks, despite having good fundamentals and good order books, if they've extended so much, then there is going to be some sort of a time and price correction in these stocks at some point of time when the sentiment reverses for the market.
All right, another stock that continues to rally, in fact, since Wednesday, LIC. LIC rallied 4% on Wednesday, has in fact picked up some more momentum this morning. All of that on the back of the news that there is some relief there as far as SEBI is concerned. What's your view on the LIC stock?
I haven't seen the SEBI order, how much is the, impact in terms of financials. But in general, I think the life insurance space is quite competitive. LIC has been losing market share over the past few years, and now since the listing, also the stock hasn't run, too much. So my sense is that in the short term, this being a very competitive space, we have almost 24 players. This market would see some sort of consolidation. Obviously, there are a lot of things which can pull the trigger for insurance companies. Like you can have 100% FDI coming in. There are a lot of clauses which the IDA is already working on, which can also be beneficial to these companies. But as of now, I think after having sort of 2-3 years very harsh because of COVID on their financials, they are sort of recovering. LIC may not be able to compete against other private life insurers given their offline presence more than online.
But do
So it's a
do they
wait and
really
watch
have
for
to
me.
compete, Amit, at this point? Do they really have to compete? The question is, given their offline presence and massive presence at that, do they really have to compete, given their market cap?
See, one needs to understand that till 2003 there was no competition. Only LIC was there. Now everyone who has sort of bought a policy of 10, 15, 20 years, those policies are expiring. So now with all the online blades, a lot of platforms have come up where we can where you can go and buy an online without the intervention of an agent. So my sense is over the next few years, we are going to see a shift from LIC to other private insurers who are offering better products. It's not that LIC is going to go away at any point of time, but my sense is over the next 10 years, LIC would keep on losing the market share as compared to other private insurers.
All right.
Especially also because you have the likes of Geo Financial Services set to enter the insurance space. At least that's what we understand, Amit. So I'm guessing you're factoring that in when it comes to LIC losing market share.
Yes, Reliance has also made a point in the AGM that they will be entering, insurance space, and they will be doing it purely digital to start with. So I think the competition in this space is going to be harsh. I mean, competition is going to be stiff, and I'm not 100% sure that how LIC is going to compete with that competition.
Okay.
Given the public dynamics attached to the company.
All right, let's also quickly touch on oil and gas stocks. ONGC and GAIL up. There are, domestic cues, but there are also global cues. Globally, Brent crude at $90 a barrel. Domestically, ONGC set to infuse 15,000 crore rupees in petro, literally buying out GAIL at this point. All of that is auguring positive. GAIL was down, in fact, in the last couple of trading sessions, mainly on the back of the fact that it's going to get more and more expensive for gas production. Oil imports will be impacting India, as well as, all oil and gas stocks for that matter. What's your view of the sector?
I think the recent, announcements by Saudi in production cuts, we might see even a further movement in crude above $90. Brent going above $90, so it could even touch, I would say, $95 to $100. So in short term, that is going to be sort of beneficial for the companies. But I mean, as an investor, I would always look at how much money they can make when the crude rises, and the answer is actually no, because of the way crude prices are not allowed to move as per the international prices, and government sort of regulates it indirectly.
Right. So will it be beneficial for companies, Amit? I mean, at least my view is, and please correct me if I'm wrong, there is unlikely to be any passing on of higher prices or higher rates of crude to people in India. Multiple factors. Even though our prices are changed on a daily basis, they are unlikely to change. That's the view. In fact, that's come in from a lot of experts that we have spoken to in the last couple of days, which essentially means that all OMCs will have to bear the brunt of it.
Yes, that tends to happen. In fact, I don't think the prices are changing daily since past few months. The issue here is again, we have a big election season coming up. First, we have 5 state elections and then the general elections. In such a scenario, obviously if the international crude prices go up, let's say $100 or even more, then we are not going to see a similar kind of movement here. Already we have seen that a lot of the states haven't really cut even the VAT, which was cut by the major government last year. So a lot of non-BJP governments haven't cut it. So my sense is, all these oil and gas companies have to bear the brunt. And in fact, if the prices go up, they even put on the duty extras to earn more money out of it. So it's going to be not so difficult. Not so easy to actually make money out of it. There could be trading opportunities, but I don't think there is a sort of an investment opportunity into this.
Right. Just one off question on the entire oil and gas space. The days of cheap Russian oil are over clearly. And you have other issues. With Brent going up as well. But there's a good chance that all of that could mean augur well for the pure gas stocks and not necessarily the oil stocks. Would you agree with that kind of an assessment? Because gas would then become the next source of energy that's affordable.
Yeah, over a long run, that's going to happen. They have got into a sort of a consultation paper where by 2026 we are going to fix the cost price and then it's going to move. But in India, you don't know whether how is that going to be implemented in the next couple of years. Obviously, the attempt is to move towards gas and less of oil imports. And there is a lot of capex which is happening in the gas space currently, but it's more of a developing kind of a situation at this point of time. How much the companies will be allowed to make a profit out of it.
All right, let's quickly move on to gaming stocks. Gaming stocks that we sort of and are guilty of underwriting.
Yeah.
And underwriting on the back of the GST that was implemented.
Yes.
A lot of people said it's the death of online gaming platforms in India, death to online gaming platforms in India, casinos, horse racing, etc., etc. That hasn't come through. That hasn't come up. In fact, Nazara Tech, there is a value proposition that Zerodha has seen, and now SBI has invested over 400 crore rupees.
Yeah, and that in a sense is a contra call considering the scheme of things. Because if you thought that with that kind of a GST, 28% almost, it was going to be like, how are these companies ever going to make profits? And then they're spending so much money on promotion and advertising and brand ambassadors, and the costs are only shooting through the roof if you want to be an online video gaming platform and get across to as many people as you can. But what this does is essentially turn things, turn the table, so to speak. Absolutely. As far as online gaming companies are concerned. It's not one or two, it's 500 plus crore rupees within a span of 4 days. First, it was around 100 crore rupees by Zerodha for a 3.5% stake. The names also matter here. Right. The companies that have invested in online gaming, a company like Zerodha, which is known for having a solid fundamental business model in a sea of startups which don't have profitable business models. Zerodha is a standout. So which means that when it comes to the business of investing money, you can't doubt Zerodha's calls. So the name tag that comes along with the 100 crore rupees is more important for online gaming, if you ask me, than the 100 crore rupees. And then comes something like SBI MF, largest bank in the country's mutual fund house, investing over 400 crore rupees, 410 crore rupees in Nazara. So all these point to the fact that maybe there is light at the end. There is light at the end of the tunnel as far as online gaming companies are concerned, and to the point where all the joy in Nazara seems to be rubbing off on Zensar Tech as well. So I'm thinking this is a voice in support of online gaming business in India. Shweta.
All right, online gaming business not going away anytime soon. What's your view on the online gaming industry? The stocks are up this morning, Amit.
As far as the real money gaming companies are concerned, I think the 28% GST was a death knell for them. So we've already seen a lot of companies shrinking their operations, cutting out cutting out operations. There are a lot of job losses also. A lot of people have been laid off. I think that is going to continue. There could be some opposition. Like I think Karnataka yesterday has said that they have put off the decision for some time. So there could be some dilly-dallying happening on the final implementation of the 28% GST. But as far as I'm concerned, if the 28% GST is there on the real money gaming segment, then that is as good as dead as of now. As far as Nazara is concerned, I think given their business model, they are quite diversified, and less than 3% of their revenues actually comes from the real money gaming set, real money gaming segment. Now, what is interesting is that Zerodha was quite invested in Delta Corp, a listed entity which has been, bear the brunt of this 28% GST because they have big casino operations. Their subsidiary Delta Tech Gaming was about to go for an IPO in October. So I think that whole thing got impacted, and Zerodha has actually sold their stake in Delta Corp last week on the exchanges through a block deal. And I see move towards Nazara Tech as sort of extension of selling their stake in Delta Corp, even though Zerodha has not directly invested. It is, I think, through Nikhil Kamat's office. But yeah, I see that shift happening from a company which is impacted by 28% GST to a company which is not impacted by 28% GST. Obviously, SBI Mutual Fund is a big, vote of confidence for Nazara Tech, almost 10% stake into it. There are some, legacy investors like Rakesh Jhunjhunwala office also invested into Nazara Tech. So I think things are looking good for the Nazara Tech as a company.
Okay.
Just a quick question, if I were to ask you, is all the action in Nazara the reason why you're seeing Zensar up as well? Is that then we are interpreting it right that it is a vote of confidence for the online gaming industry and online gaming stocks consequently?
Is it a vote of confidence?
Yeah,
or are we reading too much into it?
Yeah,
because
exactly. I want to ask that exactly.
As you said, only 3% of Nazara's overall business revenue comes from online gaming. So are we reading too much into this news?
No, I think the correlation is not really correct. It is more of a social media noise. Zensar Tech does not, have a very strong revenues coming from the RMG segment, the real money gaming segment. So I think it's more of a causation which a lot of investors are drawing, just reading news across the social media. You actually study the balance sheet, the impact is very less. Zensar Tech has a management change in the last 18 months or so. Their products are doing well. They were less impacted by all the international slowdown because the geographies they were working on, they have seemed to have stabilized and doing well. In fact, if you look at all the mid-cap IT companies, not just Zensar Tech, even First Source Solutions, or Cyient DLM, they are doing well. A lot of these are companies that are also getting projects from the defense and the railway
Amit, mid-cap IT as a space in general has been doing well, considering how the large cap and blue chip IT has been under pressure in the recent past, don't you think?
Yeah, so I consider them to be separate segments. I mean, obviously the IT services segment, your Infosys, HCL, TCS, etc., fall into the services bracket. And what we have seen is that, in general, commentary from these IT companies have not changed much since the first quarter results were out in July, August. And there is not much sign of a turnaround at the ground level for the large cap IT services company. However, the situation is not getting worse, and with the expectations of a possible improving macro environment and probably interest rates coming down, the tech spending with these enterprises should also bounce back sometime next year when the budgets are refreshed. So I think on the longer term, the growth rate could be again get back to pre-COVID levels for the IT services company. But at this point of time, the more AI tech-based companies, the product companies are doing well as compared to the last.
All right. All right. One other thing I want to ask you this morning, Amit, is that there is news trigger for this as far as the TV18 stock is concerned, and that is the fact that Viacom 18 has bagged the rights for ISL for the next 2 years, and after 9 years of being with Disney Star, Viacom 18 managing to snag to snatch the rights away from them. Talk to us. Reliance stock also trading up in the green because it is, after all, Viacom 18 is a wholly owned subsidiary of Reliance. Are we again reading too much into it? Is the markets, in fact, reading that as a boost for a Reliance stock, or because TV18 stock is up nearly 2.5%? And there's a clear correlation over there. But, is there anything to do with Reliance?
And a lot of volatility of late in the TV18 stock as well. So if you could perhaps explain to us what's happening there.
So the TV18 just constitutes the TV part of it, but the Network 18 company also have the other digital ventures like Book My Show and Forbes and a couple of other magazines, online magazines also. So a Network 18 is more of a play on all these parameters. Obviously, Viacom has got a lot of sports deals now. The bigger ones being the IPL, and very recently they've also got India domestic cricket season for the next 5 years. They also have South African T20 and South African international cricket as well. Now they have got this Indian Super League football matches as well for the next 2 seasons. So I think the whole basket for Viacom or I would say Jio Cinema, that is getting better and better. I think the question still in the mind of a lot of investors is how they are going to monetize this, because right now a lot of these things are available for free, and only the HBO portion is at 999 per year. So I think that the volatility got more to do because investors are excited by what Jio Cinema is bringing to the table, but because there is no concrete plan of monetizing them, the stocks are not really running away as such. So I think overall the basket which Viacom or Jio Cinema has created, that is quite impressive. It again shows a lot of consolidation is happening in the media sector as far as the available gaming media is concerned. So we have to sort of wait and watch how they are eventually going to monetize it. My sense is come the next year IPL, there would be some sort of money which we have to pay to watch it, and not going to be free like it was this year.
All right, Network 18 stock also up by 2.47% this morning. TV18 stock up by 2.37%. That's the latest coming in. Stocks in action on your screen at this point in time. And those are the stocks we continue to track here on News 9. Amit Gupta, thanks very much for joining this morning, sir.
Thank you, Amit. Lovely having you as always.
For your inputs.
Thank you.
Let's move on, and let's move on to a story that is coming by the way of imports of IT hardware in India. Weeks and months after that ban of IT hardware, including laptops, palm tops, servers, something that industry was, really gearing up to protect itself, what to do in case of a rising demand, because the notification that came out on 3rd of August was to be implemented immediately. There was some relief. It will now be implemented from 1st of November. But the latest that we have is that IT hardware imports into India are in fact at an all-time high.
Right.
Jumping as much as 50% in the month of August from July.
Right. It sort of reminds me of, how, you suddenly people start stocking up on cigarette packets before the budget. Because that the budget, they're going to hike cigarette taxes on cigarettes, and it's going to all right, before that happens, let me just stock up on as many cigarettes in the old price as possible. So clearly the new legislation or the new regulation regarding, tablets and PCs to be made in India, only to be used with those that made in India, that kind of a regulation kicking in. Obviously, there was a lot of callback to the license Raj. The possibilities of a license Raj being coming back with a regulation like that, where the government decides whether you get to make a laptop or not, or a tablet or not, and only then do you even get to sell that laptop or a tablet in this market. Now, with that that kind of regulation did strike fear in the hearts of so many big players. I mean, Dell, Lenovo, you suddenly start seeing these people reacting. So if you ask me, I think this is a build up to that. What people don't know what's going to happen from the 1st of October. So I think, I think it's a reaction to that.
Right, and 1st of November, in fact, is the timeline given to IT hardware companies. Also interesting that we've been discussing and news of many more takers for IT hardware PLI. Almost 40 companies have applied for that PLI. There were no takers at the start of this year. Suddenly you have a ban that kicks into place from immediate or with immediate effect. Then later there is a hue and cry. The government says, fine, we're going to give you 3 more months to recalibrate, to figure out new supply chains, to start making in India and start applying for that PLI scheme.
Yes.
Start applying for those incentives that we were giving to you, that we have doled out for you. And there is an uptick there, but also in the run-up to the festive season. And since we are discussing festive season, the demand that is likely to go up for white goods, exactly, and servers, palm tops, laptops, PCs, more and more people are going to buy it towards the end of September, which is when people start buying more. And companies, they're preparing to stock up to meet that demand. They don't want to be caught in a place, in a moment where they do not have enough supplies to meet that rising demand. And that is now happening. So let's quickly also run our viewers through what has happened so far. Remember, DGFT banned, the Directorate General for Foreign Trade banned imports of IT hardware back in August. 3rd of August was when that ban was notified. Laptops, PCs were put in restrictive category. The order was then deferred because of hue and cry from the industry. They said we're not prepared for it just as yet. And the implementation was deferred to 1st of November. Remember, after this, we are now looking at an import surge for the month of August, possibly also going into September, which is what a lot of companies and a lot of suppliers are talking about. An import surge of as much as 50% will perhaps also go into September and October as the ban kicks in from 1st of November. It exceeded to 1.2 million units in the month of August from 800,000 in the month of July. And License Raj, since we're talking about License Raj, this was the start of it all. Fears around why government and should government in the first place go back to a draconian License Raj where companies will have to apply or procure a license if they want to import from other countries.
Or sell anything, especially the thing is that electronic goods have become the focus, and that's where you see consumption never abating as far as electronic goods are concerned. People are going to be consistently buying phones and laptops and tablets all the time. Nothing is going to stop them, and they're not big ticket items like cars, which makes them think twice, thrice. And these days they're not thinking about cars. Car sales are going through the roof, and they're willing to invest multiple lakhs of rupees and in big ticket purchases. I mean, phones these days, unless you have an iPhone, people don't hold on to it for more than a year. If you're on an iPhone, you want to hold on for a year. So the propensity for consumption is extremely high. So the government obviously looking at it as an opportunity where if there is so much propensity for consumption and demand, how about we serving that demand? The only thing is that I really wish that thought had come in when already work on electronics manufacturing has already progressed beyond a particular stage, especially to feed the demand of a country like India with more than 1.4 billion people. And those were the fears that struck people's mind when the moment the regulation came about. And clearly,
so the idea is essentially to make in India. It's important to make in India for Indians. You've got to make in India.
It's like, I'll give you another analogy. It's like movies. Let's make Indian movies that India can enjoy, because so many Indians, especially English-speaking ones and English-thinking ones, just want to do away with Indian movies and just watch Hollywood movies. So that's like giving away revenues to Hollywood movies and giving away money to people from outside. So we should make Indian movies and us going and consuming it ourselves and keeping the money within India. So in that sense, that's the level of consumption with which is going to happen in electronics as well. It's our laptops, our PCs, so that's a future we're looking at. And that future, fingers crossed that we have enough and more manufacturing units being set up, enough and more jobs being created, beautiful and more Indian brands coming up selling lovely laptops and PCs. That's the beautiful future that we're envisioning. But for now, that means a draconian legislation that reminds you of License Raj.
And not just for now, I think fears will also and continue to persist around quality, because if you've got to make in India, you've got to source from India, you've got to localize, and for that you've got to find find the right supply chains, right partners,
Absolutely.
and procure within the country. Are we prepared is the question. Are we going to compromise on quality for making in India? That's the fear a lot of people have at this point.
If I can be devil's advocate, you're absolutely right in asking a logical question like, are we prepared? But they say you can't be every single time wait for yourself to be completely prepared to start.
Okay.
You've got to start somewhere. So this will be the devil's advocate's argument to your argument, saying that we don't look like we're prepared, but we've got to start sometime. So but is this the way to start? Then that's a separate debate about how to improve Indian production of electronics. Just to give some numbers in perspective, Shweta, right now, you have a state like UP and Tamil Nadu, which is not comparable on any counts. But you can compare these two states when it comes to electronics manufacturing, because these two states are competing. UP, incidentally, manufactures more electronics items than Tamil Nadu does. So, you have a huge potential for electronics manufacturing in this country. Non-manufacturing states like UP have the chance to leapfrog the likes of Tamil Nadu and Karnataka if they get their policies right, if they get their investments right, get the right private players to come and start investing in electronic manufacturing plants right here in Noida. Noida's and Greater Noida, famous for electronics manufacturing in UP, the hub of electronics manufacturing in UP. So, sitting in Noida, I'd have to be a little bit positive about India's ability to manufacture its own PCs and tablets at this stage.
All right.
I am sure we're not fully ready.
Okay.
I agree with that hypothesis completely. But fingers crossed, let's hope we're ready as soon as we can. In the meanwhile, we're stocking up on imports.
All right. We're stocking up on imports. India moving perhaps, as some would say, towards more protectionist policies. Another country moving towards, and in fact is already there, China. And my colleague Amit Ranjan is hoping, and I'm hoping he'll walk into the studio and explain to us how India and China are at least comparable, at least on one parameter, and that is how protectionists we are getting about our domestic manufacturing capabilities. China has now banned iPhone because it's making its own Huawei.
That is one argument. There is the flavor of the season is deglobalization. Up to now we were.
It's interesting you said that. We are hosting G20 Summit.
Fair, but up to now, China was the target of decoupling, the word that gained prominence in the last few years. Be it European Union, be it the US, be it Asian countries, Australia, India included, they were trying to decouple from China. Now, it was the outward decoupling. Now, it is the inward decoupling that China wants to do away with its reliance on US tech. So, ban on the government and state-owned agencies of iPhones is likely to be imposed. This will affect 45 million iPhones that are sold in China in 1 year will go down by 500,000. And that has reduced Apple's market share by 212 billion in 1 day.
Okay.
The ironical thing or startling thing about this is $212 billion equals to only 7.1% of its market value, Apple's market value. It has hurt Apple. Apple is the main component stock in most of the US equity indexes. So it has hurt Apple, but only by 7.1%, 212 billion of it. But that's the other part of it. Like you mentioned, this move has coincided with Huawei launching its own 5G enabled smartphone. So all those government agencies who were probably buying those 500,000 Apple phones will now probably or are at least nudged towards buying a Huawei smartphone.
Okay.
What about nudge? It looks like they have banned iPhones. You can't buy iPhones anymore.
And I must say, I mean, you're saying the impact is insignificant. If the shares go down by as much as 7%, that is significant.
It is significant, but 212 billion and 7%. It's just 7%. That's what I'm saying. For any other company, it would be much bigger. 212 billion is a big amount, dollars.
Right.
Yeah, fair enough.
Right.
But my only concern is not much of a hurt as far as stock is concerned. Stock might even recover because of other news triggers going forward. But how much of a hurt is it for Apple's business? Because let's face it, the biggest market for Apple phones in the world is China.
Biggest market is China. Biggest production base is still China. For all the news of it coming out, but that will take time. Something that they have developed established over the last 2 decades,
right?
To shift out of China, whether to lock in stock to India or all the other ASEAN.
I'm talking about the revenue hit for Apple, because I'm guessing the 7% hit is also based on the fact that Wall Street analysts are estimating a certain amount of big revenue hit when you get banned from China.
Yeah. The numbers, at least it is the 500,000 phones that they were expected to sell to government agencies, iPhones.
This is only the government contract where it's been banned from. Private, anybody, private individual in China will be able to buy iPhones anywhere.
Right.
They're in the market. They're not being thrown out of the market. The government agencies and the state agencies are not buying them.
Okay, but a government push and a state push, and we're talking about a country like China, the moment government starts pushing for something, people are inclined to follow.
Probably in China, maybe not anywhere else.
Right.
But see, China market is 45 million per year of iPhones. Minus 500,000 is not that much.
It's 44.5 million.
44.5. There you are. So it is still a small come down. But as you say, probably in China people will follow. Maybe in other countries they won't follow so much.
And you know, since we're talking about why this has happened, and one of the triggers, as you said, is China's Huawei launch, and China wants its government agencies, the government, people working within the government, to perhaps use a Chinese-built phone as opposed to use perhaps a US-built, which again is not true on technical levels because iPhones are being built in China. But essentially, I think this is the soft war, or a soft war that is ongoing between US and China as far as tech is concerned, tech prowess is concerned.
China realizes that the whole world, because of whatever it has done politically, is trying to decouple away from China. It has to take measures to protect itself. It knows, like India, it has a huge consumer base. It can take care of itself.
Okay.
So it wants its products to compete with the best in the world. Therefore, Huawei against Apple. Apple has...
Makes sense for China.
Makes sense for
Does
China.
It make sense for India?
Like India is doing for itself. We have a big market. That's the similarity between us. But we don't do blanket bans, probably not as yet like that. The import bans are there.
Right.
Import curbs are there.
We do blanket bans on TikTok.
That's political.
Okay, but I do wonder if it's going to be advantageous to India at all. I understand that it's not banned. iPhones are not banned in Chinese market. It's only been banned by government, for government agencies, for its own officials. Would that be advantageous to India in some way or the other? Perhaps we'll have to wait and watch.
The market shift will always be advantageous to India. Anything that goes out of China,
comes
India is
to
one
India.
of the biggest suitors. Because we have an equally big market.
Now maybe we can do the opposite and go like, we should give out 500,000 Apple iPhones to Indian government officials, so that now you can reduce bribery. So many government officials who like buying their iPhones can't have the salaries
can't tap into their phones. More safe, more secure.
Yeah, more safe, more secure. Government information can be kept, more protected in iPhones. Maybe it's a good idea that, what say, Amit?
Yes. For consumers of iPhones, there is just a vote of caution from my side.
Yes.
If you are shifting factories and manufacturing facilities out of one country, there is a cost involved. So in the immediate term, the cost of iPhones may just go up.
All right. And since we are talking on China, we know Xi Jinping is not coming to India, at least for G20. But G20, as the curtains roll, will bring you all the latest updates here on News 9. All right, as I said, curtains are rolling. G20 Summit, and India is prepared to host. From Rishi Sunak to Joe Biden. Joe Biden is finally coming. We know that for a certainty now. Lots of updates coming in by the way of the mega preparations for G20 here in national capital. Another update that is coming by the way of traffic advisory and this disruption in supply chains. It's going to be advantageous for those who are catering to people who will sit at home for the next 3 days, but not so much for those who are hoping that people will come and buy, especially in Delhi and partly also in NCR region, specifically for retail sectors, for shopkeepers, for people who are, distributing, or rather for shopkeepers of smartphones, white goods, FMCG, all of that could take a beating.
And mainly because most people can't take their cars out to go where they want to go because there are so many restrictions, across the city of Delhi. If you can't take your gadi out and go somewhere to buy something, you won't buy anything from FMCG to white goods. And everybody wants to go out and buy things because, we are at the threshold of the festive season. We're looking forward to Ganesh Chaturthi. We're kicking off our festive season with India's own G20 festival. I mean, the first thing to remember at this stage, Amit, please.
No, please go on.
I was going to say that, it's not every day that India has a G20 presidency.
Okay.
It's not every day the national capital is hosting something like this. India
is as big as this.
As big as this. So Well, it is going to be inconvenient for people in Delhi NCR for 48 hours, but the kind of name and game that India will get by hosting this, Joe Biden coming to Delhi, all big leaders coming to Delhi, meeting Prime Minister Modi on his home turf. You know, we always talk about when Modi ji goes abroad, you have those NRIs, loving his presence over there and going and meeting Biden in America, Sunak in UK, all of that has happened. Now, this is all of them turning around and coming back to meet India on its home turf. It's a great show of ability as a superpower. And yes, the fact that India's rise as a superpower amongst global leaders further reiterated by the fact that China Premier refuses to come for an event like this. That's another affirmation if you ask to say that, you think you're big. Yes, we are. So I think, all of this, I really hope, my only takeaway from all of this is, Shweta, that like the conversations between Biden and Sunak that take place away from the main stage between Modi, our Prime Minister, and Sunak and Biden, and if we can look forward to a trade deal with UK in the future,
and the
if we can look forward with the trade deal with the US in the future, if this can serve as the bedrock for those conversations, I'd be extremely happy, Shweta.
All right, and of course there'll be discussions on trade, there'll be discussions on crypto, there'll be discussion on a whole host of things. Trade specifically, larger discussions, we're expecting a trade partnership with the US at this point in time. We don't know whether there's going to be a conversations on the sideline with Joe Biden.
Nobody knows. I'm hoping that because it's normal to speak about bilateral relations away from the stage and then talk about the crucial things. I mean, the trade deal with the US and the trade deal with the UK are extremely crucial for India's economy going forward, which have been lying in limbo for so long for multivarious reasons, from tariffs to other things that have really blocked the signing of the final trade deal. We do have a trade deal with Australia,
right,
which we managed to cover, but US and UK are going to be crucial.
Okay, and crypto regulations, as we've been talking about crypto regulation, we know that there may not be a ban, but there may be a regulation in order.
Yes. Yeah, you're going to say. Go on. No, I was going to say that I'm surprised, Amit, that now after all the talk of crypto being illegal, etc., you have a G20 summit that wants to regulate crypto. Suddenly, are we back to making it legal?
No, they're not. They are not making it legal, and they have cautioned against countries making it a legal tender or giving it a currency status.
Right.
But they have cautioned against a blanket ban. What they have suggested is an agency, task force, financial action task force, that looks at the crypto assets being used either for narcotics or for terror financing or for other laundering activities. So, and let's mind, crypto is something that is so uncontrollable that it can go from 2 trillion to less than a trillion in a matter of a month. So it's that volatile and there is no control. So a blanket ban, because it's borderless, may not work. But they have said that individual countries should have their financial action task force, not give it the status of a currency or a legal tender.
Right.
All right, so IMF IMF and FSB report, they're suggesting banning cryptocurrency is not the way forward. It's not the solution. But there is, of course, cross-border trade. If it's not going to be out there in the white market, it's going to be in the black market, and it's going to be on internet. So it will continue to happen. Banning will not be a solution. The only solution, perhaps, is to regulate it in order to individually, in order to keep a tab on any terror financing that may happen through crypto. All those details, of course, coming in from the G20 Summit as India prepares to host a whole lot of leaders starting today. We'll keep bringing you updates here on News9, but that's all we have on this bulletin. Thanks for watching.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of the Qutub Minar.
When you enter capital cities of some of the biggest countries in the world, you don't have 3 garbage mountains waiting to welcome you, depending on whichever side of the city you enter from.
The thing is that a lot of times we talk about landfills only when there's a fire at the landfill. You need to understand that a landfill is at fire almost throughout the year. It's only when the firefighters are not able to douse the fire is when it actually catches the nation's attention, the city's attention, or media attention.
The towering landfills, worsen one of Delhi's biggest problems: pollution.
यहाँ पर आप रात को आओ, दिन में आओ, आप 1 घंटे बैठ नहीं सकते बाहर। इतनी धूल, प्रदूषण, महक, आप खाना भी नहीं खा सकते बाहर बैठ के।
Life around the landfill is a curse.
हमारे घर में जो बड़े हैं उन्हें अस्थमा के वो पेशेंट है, आए दिन उनको नेबुलाइजर लगाना पड़ता है।
डॉक्टर ने भी मुझे ये चीज बोला कि यहाँ का एरिया छोड़ के कहीं और चाहिए।
Delhi's garbage mountains are now a fetid symbol of the national capital's trash problem. The question is, who is to be blamed? Watch Delhi's Garbage Mountains. Streaming on News 9 Plus for the Genflix.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ।
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Akshay Kumar makes his Marathi film debut in Mahesh Manjrekar's Vedat Marathi Veer Daudale Sa. What's inspired Khiladi Kumar to foray into new terrain? Playing iconic Maratha king Shivaji Maharaj, he's jumping on a bandwagon that spells magic on the box office. Why are filmmakers in a rush to chronicle the life and times of Shivaji Maharaj?
Why do we feel the hunger, the need? Why are we compelled to make a film on Chhatrapati Shivaji Maharaj? And that too so many films. For a simple reason, he was the people's king.
So I think there's this herd mentality in the film industry. One film clicks, then there's a line of producers who announce films with similar storylines.
Personality that has not been adequately explored on the big screen.
I think among filmmakers the craze is because the Marathi audience is somehow inclined to seeing films about the life and times of Shivaji Maharaj, and several films in the recent past based on his life or based on some chapter of his life have done well, you know.
Now we see in the last 10 to 15 years that historical subjects have made a remarkable comeback. So here is a personality and a remarkable personality that hasn't been explored in the new era. I think that's the reason a lot of filmmakers are tapping into Chhatrapati Shivaji